For more exclusive content from CNBC Crypto Trader, hit the subscribe button now.
Crypto Trader is proudly brought to you by eToro. Discover a simpler way to trade and invest in cryptocurrencies and more.
I'll tell you it. This week's edition of Crypto Trader comes to you from the Crypto Invest Summit here in Los Angeles. 6,000 people, 185 speakers, a whole lot of exhibitors, and all the press you can imagine. This must be one of the biggest crypto gatherings that the West Coast has ever seen. Tonight, we're going to be looking at the stories that are making crypto news headlines, including BAKKT finally announcing a launch date, Coinbase raising money on a pre-money valuation of $8 billion. We're going to be asking how fund managers are navigating the crypto winter, whether an equities meltdown is imminent, and if so, what does this actually mean for crypto? Is the world ready for the securities token revolution? And why is trading on a DEX such a bad experience? For all those stories and more, join us tonight, because tonight and every other night here at CNBC, we're all in on crypto.
Crypto Trader is proudly brought to you by MELTDOWN, a full-service investment bank for the digital token capital markets.
Welcome back. BAKKT finally announced a launch date for its Bitcoin futures contract, which will be traded on the BAKKT platform, which is owned by the same owners as the New York Stock Exchange, the ICE Group. The launch date is set for December 12, 2018, and if you remember, that's about 1 year after the original Bitcoin contracts were launched on the CME and CBOE. Now, the difference between the contracts that were launched on the CME and the CBOE and the current BAKKT proposed contracts are that the CME and CBOE contracts are cash-settled futures contracts, which essentially means that you don't need to buy the physical underlying asset. With this one, however, you actually need to buy the Bitcoin, which should create a whole lot of demand for Bitcoin. Now, when you take that and you couple it with the news that Fidelity is coming into crypto and all the other good news, you'd expect that we'd be in the middle of a very big bull run. But Bitcoin can't break $6,500. Joining me to talk about why Bitcoin can't break $6,500 is Tim Draper. Tim, so much good news in the market. Why can we not break $6,500? Where is this roadblock coming from?
Well, I think I'm really looking at it as this is a transformation that's going to happen over the next 4 or 5 years. We're all going to be there. There's no reason we're going to be using political currency again, because we're going to be able to use cryptocurrency, and it's so much better. It's decentralized, it's frictionless, it's just better. So these short-term moves are going to be sort of tied to what people hear about in the news one day and what they think about in the next. But I do think that BAKKT may actually give a little bit of a boost.
So we talk about the use cases, and you and I both understand the use cases because I think we're both Bitcoin permeables. I've been labeled as the second most bullish person in the world on Bitcoin after you. Now, we understand the technology, we understand how it works, and the one thing that we keep talking about is the fact that Bitcoin actually gives you financial independence, and it allows you to hold your own asset or your own money itself. But what we're celebrating is the fact that these big centralized institutions are once again going to be holding a whole lot of Bitcoin. Have we got this whole thing the wrong way around?
I think you're onto something, because really it is a decentralized currency. It is not tied to some political force. It is free and open and honest. It's an honest currency. And so people are going to want to use it in that way. I think these are interim steps. These are bridges toward a world where we are, where we almost are watching borders dissolve and the world kind of opens up, and governments are like companies competing for us. So I think it's just, we have a vision of the future. It's a very great vision. The world will look entirely different in the future, and I believe we're getting rid of fiefdoms, and I think we're getting rid of the tribal instincts, and we're now realizing that it's not us against them anymore. In fact, I'm from San Francisco, and I'm still willing to root for the Dodgers.
So you talk about this revolution, and
so it kind of opens up. The world's sort of opening up, and governments have to think about it in a new way. They have to think about how to compete for us. And so some governments are saying, no, I like it the way it is. You know, you see China putting up walls and not letting money leave and making Bitcoin illegal. And then Japan responds to that and says, Bitcoin's a national currency in Japan. Here's how you do an ICO. Welcome. You can tell which of those economies over the next 40 years is going to do really well and which one is not.
Well, let's talk about that point, because here in the US, I think the SEC have been quite slow in coming out with real regulation, although we do feel that maybe now they're trying to play catch-up. Now with Fidelity announcing that they're going to be coming in, and they've got $7 trillion under management, and you're talking about BAKKT, which is owned by ICE, which is the same guys that own the New York Stock Exchange. Do you think that now, like, the SEC has this fire under their backsides to actually start legislating this thing?
I think the SEC is torn, and I think it's okay, because they're torn between, like, going after the fraudsters who are taking advantage of the elderly or whatever they were set up to do in the first place, and making sure that all that technology does stay in the US. And they know that it's a competitive world out there, and so they have this balance. And where Japan was all in and China was all out, the US has kind of kept like a nice, easy, nice level playing field for people to come in. They want to see the technologies happen. The last thing you want to do is do what the China dictator did. You do not want to push these entrepreneurs away. They are going to make our world just hum. This whole new financial world is going to be amazing and frictionless and honest. It's going to be really incredible. And so you don't, I mean, as a government, you don't want to mess with that. You want that to kind of happen. Sure, I think the SEC should just go do something very light touch and simplify it for everybody, make it a one-page document, say, yeah, I'm doing an ICO, here, yeah, I'm registering, it's done. Well, as opposed to hiring $1 million worth of lawyers or $10 million worth of lawyers to just get this thing to somehow become legal.
Well, they did announce last week that they're starting to help people navigate this ICO terrain, which I think was a big step forward in keeping the technological powerhouse that the US has. And speaking about technology, I caught up with Steve Wozniak to find out why he's so excited about the blockchain and whether or not he's actually investing. Let's take a listen. Now let's talk personally about your journey in cryptocurrencies. When was your first Bitcoin? When did you buy your first Bitcoin?
I tried to buy it, and I don't remember years. I don't do years very well. My son told me it was $70 or something. I went online. You could buy it from this place called Mt. Gox, I think, and you had to get a bank account at a certain bank, or you had to do faxes. I don't do that. So I never got it at that price. At some later point in time, I found online wallets were now to the point that I could, with a credit card, buy some Bitcoin, and I bought some. And I bought more to experiment with, not as an investment. I never thought, oh, I think this currency is going to go up or up. No, I wanted to learn how to buy things with it and how to sell things with it. I wanted to find out how to use it as a person and experiment, and then I never watched the price. I do not invest in stocks. I've never used Apple Stock app once. I just don't want to follow prices of things because that causes you worries. I don't want to frown in my life. And one day I saw an article that said Bitcoin was $4,000. What the heck? I went back and wrote a spreadsheet. Now it went up to $10,000, went to $20,000. Wait a minute, that was not my purpose in life, and I don't want to be watching the price. I started feeling this sort of addictive behavior coming to me, and so I sold it all but one. One's enough to experiment with, and experiment by experiment, I want to do things. Someday I want to travel to another country with nothing but Bitcoin on me.
So you believe that Bitcoin actually will replace money?
I hope it will. But I don't think it will, and I don't think it will because currencies are controlled by governments, and governments do not want to give up power ever. They don't want to give up their wealth. It's the secret of their wealth. So they really want to control all the currency, and can they create more more dollars? Can they just borrow, for example, and all of a sudden everybody's deflated a bit? That's not true with something like Bitcoin. You can't even change the supply. It's one fixed limit number. I mean, I love that kind of purity, and I'm hoping for that so much in my life that we could get there, but I have a feeling governments are going to step in.
So do you think that governments will try and limit Bitcoin? And if they are going to try and limit Bitcoin, how are they going to do it? I mean, are they going to switch off the internet? Are they going to make it illegal in the United States for people to buy Bitcoin?
Well, it's kind of like they made it illegal to have gold. But so it's going to eventually kind of get limited once it's significant and big enough. Right now it isn't for governments to control, but they are looking into large wallet companies like Coinbase to get the information they need to tax you on profits you made.
Now, Steve, in the news of late, there's been a lot of articles about you being invested or advising blockchain-related companies. And a lot of them are fake news, and a lot of them may be real news. Are you actually investing in blockchain companies?
They are all fake companies. I don't invest, for one thing, but I participate, and I am participating in a couple, one I can't talk about, and one I can, but what I looked at was companies that already had an ongoing business, for example, developing real estate, huge income, huge success, successful people, and implementing blockchain technology as sort of a different form of stock. Really, but sort of the same thing. You're buying into a company because you trust that the people who have made money before are going to continue to make money. That's a slightly different aspect than I'm buying into a whole new cyber currency. That's not what it is.
Steve, when you see or when you saw blockchain technology, do you think it's the most exciting new technology out there? Or do you think there are more exciting technologies?
Well, obviously, it's the ones you read about. There's artificial intelligence, electric cars, self-driving cars, there's blockchain. And I think that, to me, my interest probably is more in blockchain currently than in any of those other technologies. The other technologies are sort of extensions of things computers have always done for us. And blockchain is just it's very hard to describe some of the applications or why they work and why they work so well without human control.
Steve Wozniak, thank you for coming, Crypto Trader.
Thanks.
Thank you. So that was Steve Wozniak. Now, with the crypto winter now in full swing, and the ICOs almost at a complete halt, the life of a crypto fund manager must be very different from that it was just a year ago. To talk about just how different, I've got Dan Morehead, founder and CEO of Pantera. Dan, thank you for coming on Crypto Trader.
Thank you.
Dan, this October is slightly different from last October. Have you guys changed your investment strategy or what you guys look for between the 2 years?
Well, like Tim said, I mean, I think this is a multi-decade thing, and so we're always trying to look out quite a ways. And I've been involved in Bitcoin since 2011 and seen several of these cycles already. There's going to be, a dozen more before this thing's fully played out. So you have to be investing, for the multi-year approach.
So investing for the multi-year approach, I fully understand. But when I read the article that was published about you guys, where one of your funds, if I'm not mistaken, it performed at negative 70% year to date. I can kind of imagine the phone call that you have to make to investors and say, look, you gave us money and today your money is at minus 70%. How do your LPs respond to something like that?
Yeah, so luckily we have always been saying this is a multi-year trade, and so our LPs have been, they were really happy when it was up 350% last year. Obviously they're frustrated it's down this year, but it's actually a great time to get invested because all these assets are much cheaper than they've been.
So let's talk about that because people always say that when the market's down, that's the time to be investing. You guys announced that you raised a new fund pretty recently. I think it was about a $75 million fund. Where did that money come from?
Yeah, so the Bitcoin market's more manic than even the normal markets, and I want to share a strategy which is not super common in the Bitcoin industry: buy low, sell high. And it is amazing how people just, it's human nature to be very pro-cyclical. And we've had, Pantera Bitcoin Fund's been around for 6 years, so we've seen all these cycles, and we actually calculated the percentage of inflows coming in at the lows and each bucket up to the highs, and it really is wild. The amount of time Bitcoin spent in each bucket's been very normally distributed, very beautiful bell curve. And then now we're back to, Bitcoin's basically a buy one, get two free sale now, right? Like it's a third the price it was at the end of last year. Human nature is pro-cyclical, and like when the market's at its highs in December and the FOMO devil is whispering in your ear, it's so easy to want to buy. And then now when it's down, you don't want to tell your spouse you're going to buy something that's down 70% because that seems crazy, but that's actually the time to buy.
Are you still investing in ICOs? And if you are investing in ICOs, have you moved beyond the protocol plays? Are we all protocoled out?
Yeah, it's actually, I love that question. Are you still investing in ICOs? Like it's dead and it's over. And the reality is, ICOs have been around since Mastercoin in 2013, right? And Ethereum in 2014, and my partner's project, Augur, in 2015. They've been around for a long time. And our fund has been buying 1 or 2 a month for a long time. In May of last year, it exploded to, we were getting 50 a week of inbound, token projects. And then now, it's essentially gone back to normal. There's 1 or 2 really interesting projects a month.
So there's been a lot of criticism about the utility token. I mean, people here at this conference have said that when you're buying a utility token, you're buying vaporware. Are you a believer in the utility token? Do you believe that it is one of the most powerful financial instruments of this decade?
Oh, I am, and I actually have to admit, I kind of don't understand what you'd buy a token that isn't useful for. Like a utility token seems self-evident that is what you're supposed to be buying. Bitcoin's the first utility token. It doesn't charge fees. There isn't an equity behind it. There's no discounted cash flow stream. The only value to Bitcoin is if people find it useful. 6, 7 years ago, there was a few 100,000 people that thought Bitcoin was useful. Now there's 50 million people, so it's 100 times the price it was 6 years ago. And if 5 years from now, 500 million people think it's useful, it'll go up in value. So our fund investments are essentially all utility tokens.
Yeah, wait until the Africans find out about Bitcoin and the fact that they can use Bitcoin to bypass their governments. Now, our next guest says that an equities meltdown is imminent. And if it does happen, crypto is going to be the biggest winner. Stay tuned.
Christian, buddy, come sit over here. Now, the advertising offers have been flooding in. Look at the pile of offers I've got here for you. Look, let's just take a pic. Picture this. You're hiking through the Rocky Mountains, okay? And you're carrying gorgeous rosewood designer door on your back. And you look into the camera, and then you say, oh. No, yeah, you're right. It's terrible idea. For the next one, you'll be carrying a refrigerator on your back, environmentally friendly refrigerator, and then your line is, well, actually, it's just one word. We'll put that one on ice, okay? Yeah. This is a hot dog chain. You're carrying this huge hot dog on your...
Enough! I've had it. No more carrying, no more saying that word ever again. I'm a serious actor. I have depth. Why can't you get me something with like an office with a tie, for example?
Action! Bitcoin is crashing. We have to sell.
Bitcoin is a bubble! Hodl. 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 I have to find a new agent.
So my next guest says that a global equities meltdown is imminent. In fact, so imminent that it's actually going to happen this month. He also says that when it happens, the biggest winner is going to be crypto. Bo, that's really some big statements there. Yeah. Explain to me why you think that there's going to be a global equities meltdown. And you sent us some slides, and the first slide says it's a red November and everything's about to collapse. So talk me through this.
Okay. What we have, if you look at the chart here, this is called a rising wedge. And if you've noticed the stock market for years, what it's done is it's been moving up, grinding higher. And as it continues to grind higher, you get complacency in the stock market. Everybody believes that the stock market will continue to go up and it will not stop. The problem that you have is that the markets narrow. And as they continue to narrow, the price narrows. If the bottom channel breaks, the markets violently plunge. So let's go to the next chart here. This is the great crash of '87. What do you see there? It's a rising wedge, okay? So on that chart pattern, what you saw, after the bottom wedge broke, it came up, bounced, and then US markets crashed 37%.
That was in 87.
That was in 87, okay? Now, the time pattern here on that chart is approximately 760 days. This is important.
Okay.
Now, the next chart pattern here is the Great Crash of 1929.
That was a 50% crash.
That was a 50% crash. This crash, the chart pattern was approximately just over 600 days.
Okay.
So the quicker the rise, the sharper the drop.
Okay.
Okay? So this is Australia today. You'll notice Australia sits on the lower channel. If that channel breaks, Australia will crash. Let's look at Switzerland. Switzerland is sitting on the lower channel. When that channel breaks, and notice it's narrowing. All of these chart patterns are narrowing. Switzerland is about to crash. Here's the United States. Everyone can say how wonderful and how strong the United States stock market is. I fully agree. Until 23,500 is hit this month, possibly, or as early as November. When the markets touch that lower channel, you're going to see the U.S. equity markets plunge. Now, this is really important here to understand the difference of China versus the United States. Now, I don't remember if you look back, but in the year 2007, China and the world stock markets topped in October.
And then they crashed.
And then they crashed. We are in the month of October, okay? So what happened but this is interesting. This is a very important analogy here because China's not crashed. China's been crashing for several months already. If you look at 07, China dropped. There's a support line, a blue line you can see on the chart pattern. China broke support in January after it started to fall. Then you can see markets were crashing all the way into June, and then it was in June of 2008 when the US markets began to plunge because they broke support. So it took 5 months for the US markets to catch up, and then they finally crashed. So that 5-month spread basically says that China historically has led the world market.
And where is China today?
China has now falling, and it broke that support line 4 months ago.
Which means that we've got 1 month left.
Which means next month in November, the US markets will plunge with China.
So you're saying that next month? November?
Yes.
The US markets are going to plunge?
Right.
That's the equities markets?
Yes.
So I don't really care about the equities markets. I am very focused on crypto.
Well, guess what? I got some good charts for you. Let's go to the next one. Just before, we got to go through this chart here, double top. A double top means markets make a high, they drop, they come back up and make another high. If the traders can't push it through the first top, the markets will suddenly reverse and crash. And that's what you see right here in the US stock market. You'll see the US stock market, the great crash is coming. This is what's indicated. In January, the US stock markets made a top.
So what you're saying is that here on CryptoTrader, we're announcing ahead of time
yes,
that the US markets, the great crash of 2018 is about to happen.
It'll be here before year end.
You heard it first on CryptoTrader.
Yes. And let's take matters a little further here. The double top, we posted a video stating that on October 4th, the US equity markets will begin to crash. And on October 4th, the stock markets began to crash on the exact date. So the point is, the markets, and you'll see what happened, the second wedge broke and the markets plunged 1,600 points on the Dow.
Who cares about equities? Let them plunge, yes. Let them burn. What happens next?
Well, it does matter because if the markets don't crash hard enough, no one's going to buy Bitcoin. Bitcoin's not going to go up until people have a reason to invest in cryptocurrencies. So they need to lose faith and confidence in the stock market and the equity markets. That's the key.
Okay, so what you're saying is that the markets are about to crash.
Right.
The equity markets are about to crash. Everybody's going to lose faith in the stock market, and the money is going to flow up and go to
Bitcoin, the alternate coins, gold and silver. We're going to have a massive financial shift before year end. All the charts you've looked at, you had rising wedges. This is a descending wedge. It's the exact opposite. When one falls, the other goes up.
So for those of you who have equities, jump the ship And for those of you who don't have Bitcoin, now is the right time to buy. And that's not according to me, that's according to Bo. Bo, thank you so much for coming on Crypto Trader. Now, before we talk about securities token, I want to talk about a story that CNBC has an exclusive about. And that is that Coinbase is raising money on an $8 billion valuation. And that's coming up after the break.
Crypto Trader is proudly brought to you by Element, a full-service investment bank for the digital token capital markets.
CNBC Crypto Trader has obtained exclusive information that points to the fact that Coinbase is raising $500 million on a valuation of, get this, $8 billion. From what we understand, from a source that's close to the company but doesn't actually work at Coinbase, Coinbase is raising $500 million in 2 rounds, one of preferred equity and one of common stock. Now, let's look at the numbers that make up this valuation. So the valuation is between $7.2 and $8 billion. Today, Coinbase are said to have 25 million accounts, of which only 7 million accounts have got some balance of fiat and crypto. And of those, 600,000 accounts trade every single month on Coinbase. Let's look at the market shares. Even though Coinbase is available in 33 countries, on most of those countries, you can't trade using fiat. And there's no fiat on-ramps and off-ramps, which means it's only crypto to crypto, if any type of trading at all. They claim that in the US, they have an 80% market share of fiat to crypto transactions and a 75% market share of crypto to crypto transactions. Now, the numbers, the revenue numbers, which are probably the most important numbers. Coinbase claimed to have done $90 million revenue last quarter. Their biggest quarter ever was, no surprise, Q4 of 2017, when they did $450 million. Let's look at where their revenue is coming from. 80% of their revenue is coming from their consumer business. 15% of their revenue is coming from their institutional business, and 5% of their revenue is coming from their ancillary services. Now, if you look at those numbers, it kind of means that there's probably a lot of growth potential for Coinbase, who are rumored to be starting a custodian solution soon and a whole lot of other products for institutional investors. I caught up with Adam Draper, who was one of the original investors in Coinbase. He bought in at $10 million, and I'm going to ask him whether he's a seller or a buyer at $8 billion. Adam, when you first invested in Coinbase, why did you invest in Coinbase?
That is a great question. I met Brian Armstrong at a coffee shop, and then I hadn't even heard about what Bitcoin was. And he said, the one thing he said that defined my next 7 years of my career was, at some point, the world is going to be on one financial infrastructure. And he was going to be the way in which we onboard to that financial infrastructure. And then that got me thinking, why isn't it on one financial infrastructure? Why do we have all these different deposits of different financial systems? And so I ended up buying into the thesis behind Bitcoin, but I also ended up investing in Brian himself.
In your wildest dreams, when you invested in this business, did you imagine that this is what was going to happen?
He was one of my first 4 investments ever. And so I just bought into the change that was going to be happening in this crypto technology.
Now, when you look at the valuation today, $8 billion, are you tempted to exit? I mean, you're talking about an investment that you made 6 years ago at a very, very low valuation. Is it maybe time for you to get out?
So there's definitely demand to get out. I would much rather buy more. But I truly believe that Coinbase will be the largest company on the planet.
You think Coinbase will be the largest company on the planet?
I think it's going to be one of the first 10 companies to $1 trillion valuation.
Okay, tell me why you think that.
So basically, the entire digital foreign exchange economy is multiples of trillions of dollars every month of network spent. What Brian is trying to do is onboard everyone to a peer-to-peer financial banking system. It's the biggest idea that can exist, and it will fundamentally change the way the world works.
And you think Brian's the man and Coinbase is the company?
they've set themselves up to win a big part of that future. I think that as markets grow, everyone grows with it. And so there are going to be other companies that are multi-billion-dollar companies, just like the internet created trillions of dollars of value. This is the next layer of that internet.
So the critics of Coinbase have said that Coinbase has been quite slow to respond. I mean, they only had a few tokens trading until a few weeks ago when they launched a 0x token on their platform. Their customer service hasn't been amazing. Getting onto Coinbase, getting them to approve you used to take weeks, days, months. Withdrawals used to take long. While at the same time, you had other businesses, such as, for example, BINANCE, which listed a lot of tokens, were quite quick, were very good on the customer service platform. Do you think that Coinbase has what it takes not to be beaten by the other competitors?
I mean, I think rising tide rises all boats. The thing I always say about Coinbase with the complaints about customer service is that they are a financial company that had to scale like a social media startup. They were onboarding millions and millions of clients all the time, and they fixed that problem. Their customer support is actually pretty incredible. And on the slow to add, I'd say that they just want to be the most curated and thoughtful place to list these networks. And so I think that they're being more careful and selective, knowing that they have this very, very important role to play in the entire ecosystem.
So you're saying at $8 billion IPO valuation, you think it's a great time to be buying, knowing what you know about what's going on inside the company, without talking about inside information, of course.
I think it's undervalued.
That's amazing. So that's a great note to end off with. Coinbase probably undervalued at $8 billion. If you want more of this content, hit the subscribe button now. Let's cross over to Ashley Scorpio, who's on the floor at the Crypto Investment Summit.
Thanks, Rand. I'm Ashley Scorpio, and I'm here at the Crypto Invest Summit in downtown LA, here to talk about the local blockchain scene in the market. What are your opinions on the current state of affairs?
I think that it's a good time for like the projects that raise too much money and don't have a good project to like kind of lose a little bit, you know? There's too much like mania and euphoria.
And I think the true leaders emerge when it's down.
This space isn't going to stop growing, and I love the intelligence. That's why I'm here.
It's really cool that some people in old tech are seeing the gospel of crypto.
The new kids on the blockchain, so to say.
Now we have opportunity to build all the projects that we've been working on and get them out to the world so mass adoption can happen. It's just setting up for the next wave to be even bigger and better.
What are your thoughts on where crypto is and where it's going?
So I don't want to necessarily call a bottom. I'll leave that for Rand. But I do think we seem very sold off, right?
So certainly here in the United States, we're really focused on security tokens right now. There's an interesting dichotomy between the utility tokens and security tokens, but there's much more clarity in the regulation, as well as issuers are providing awesome investment opportunities.
We've seen some somewhat adverse market conditions. What are your thoughts on that? Where do you think we're going?
Right now, the United States government is $21 trillion in debt. When you have the entire world based on debt, you're asking for a correction or potentially something worse. If and when that should happen, there's going to have to be diversification. And where do people put their money? It might be gold, silver bullion, or this stuff.
The main thing I want to focus on, though, is something that I think we failed at during the last boom market, which is really helping educate new people to the space. So anyone who's interested, definitely help them along.
Everybody's learning together, and that's the one thing I've learned in this whole space and this whole conference and this whole audience, is that we all have a lot to learn, and it's moving really fast.
We're in a builder's market. It's actually for people that are out there actually building real things and that have their head down and deep in product. Like, this is an amazing time to be building.
Being outside of a hype cycle, the projects that are active, that are kind of really doing stuff right now, it's a little bit easier to kind of cut through the BS and actually see what's real and what's not.
I love the bear market. I love the bear market because people...
We should get a thing that just says bear market builders.
Yeah, it's when people are building, and it's when the very diligent, very serious projects are coming forward. Anyone who survives a winter, those are the survivalists that you want to back. So I'm excited about all of the projects coming out right now.
My biggest opinion is just there's a lot of noise out there, and it's really difficult to filter out what you should listen to, what's going to be an influencer, what's going to move the market, what you can actually ignore, who's no longer an influencer. All these things you should pay attention to.
Right now, I think we're just at a lull right now. It's going to take a lot of education and then adaptation before we really see something kick off again. But it will happen. Right now, we're just we're putting the pieces together to lay the foundation. So,
if you look at the United States, ICOs don't exist anymore. It's an STO market. So I really think the most exciting part is to watch the evolution of crypto and how it's going to impact capital formation and the markets going forward.
I think it's a foregone conclusion that securities are going to go onto the blockchain. It's a pretty inescapable conclusion that that's happening.
I'm here with Brock, who needs no introduction, who's obviously one of the biggest names in the industry. What are your thoughts on the current market conditions, and where do you see it going?
Well, I couldn't be more enthusiastic, but I love bear markets. I don't know what to do when the markets are like flying high, because the markets become irrational. This is where the true remain.
That's it from the floor here in downtown LA at Crypto Invest Summit. Back to you, Rand.
So with all the talk about the securities token revolution and people talking about the whole world being tokenized, the big question actually is whether the world is ready for the securities token revolution and whether we have the right infrastructure. Joining me here at Crypto Invest Summit is Ami Ben David, who runs a fund called Spice VC, which is a securities token fund. Ami, welcome back to CryptoTrader.
Thank you.
Ami, is the world ready for securities token revolution? There's been a lot of talk where T0 raised in excess of $120 million. There's a whole lot of other exchanges coming online. And people are starting to talk about everything being tokenized. Do we have the infrastructure?
So short term, yes. I mean, we are tokenized ourselves. I designed the first platform to tokenize on top of Ethereum. So for the foreseeable 1 year, we're fine. But when you talk about the real potential of tokenizing trillions and trillions of dollars worth of assets, we're nowhere near ready.
Now tell me what you mean when you say we're nowhere near ready. Why aren't we ready?
The current blockchains out there were not designed to do securities. They were not designed to do regulation. They were not designed to do any of the functionality that is required for this. And all of it is being built on top of Ethereum. I'll give you the core simple example. Ethereum is what Vitalik called the crypto economy. So if I give you 10 ETH, the whole system is incentivized to make sure that you have 10 ETH and I don't have 10 ETH. Now let's assume I gave you 10 tokens that say that you now own the Brooklyn Bridge. In terms of Ethereum, everything is fine. You now own the tokens and I don't own the tokens. Now, do you really own the Brooklyn Bridge now?
Well, I don't know. Do I have the deeds? Do I have the papers? Do
Obviously
I have the
not,
contracts?
because nobody in the platform is incentivized to look outside the blockchain and check whether this bridge exists, whether it's yours, whether you can sell it, whether it's allowed to sell, nothing. So you have an ecosystem that is designed to be internal, but is not designed to look at outside assets in the world. And out of that, all the functionality that's needed for that is not there. There's no identity, there's no asset management, there's no privacy, there's no regulation. All of it is being done on top and not at the base layer. And that's probably going to change.
Okay, talk to me about the characteristics that this blockchain needs to have in order for it to be tailor-made for securities.
So I started working on a concept which I called Onera. It's really a concept at this stage, and we're looking for feedback because it's an early stage for something like that.
So you're not raising money. You're not coming here to shill on my show and say, hey, we're raising $50 million in an ICO.
We're a fund that invests in a security token ecosystem. We want this ecosystem to grow. So in order to make sure that it grows, this is an initiative to make sure that it has the infrastructure to grow. And so when we looked at it, we said, what would be the basic principles of blockchain?
And what are they?
So there are 9 principles they came with. And the first 3 are the entities that play in this industry. So the first entity on a platform like that, on Onera,
is the user.
Is the user. Now, we call them the owner. And you cannot be on the platform if you have not gone through KYC and AML. So it's not anonymous anymore.
Basic. Let's move to the next one.
Yeah. The next one is the assets. If you want to upload an asset to Onera, we invented something that is the equivalent of KYC. We call it KYA, Know Your Asset. And know your asset is basically a set of documents that somebody looks at the asset and bring all the documents that prove that the documents actually exist and the token holders actually get rights and upload it to the blockchain in an immutable way so that when you need it, you can use it.
So you know your client, you know your asset, what next?
The next is the nodes. On a regular platform, the nodes would be anybody with a computer. But on an ownership platform, we want the nodes to be financial experts. Anybody that provides services for ownership will be nodes on this platform.
All right, what else? What are the other characteristics? We are running out of time. So
okay, so the last main one is actually the consensus. How is the consensus built? So the way that it works is this. We call it proof of ownership, which is a version of proof of authority. And the way it works is like this. If you want to upload an asset to Onera, you have to choose one primary node. This primary node, if it's equity, you'll get an investment bank. They look at the asset, they do the KYA, they take responsibility for it. They actually stake their brand and their reputation. And what they gain in return is from now on, they get the lifetime value of all the transactions. So they become the block producers for your asset.
Now you're saying you're not raising money, and this is just a concept. If our viewers want to get more information about this concept, where can they go?
So we opened onera.io, and we're going to have the presentation of the new proposed blockchain on there.
So that's onera.io if you do want to get more information about the securities token revolution. And it does sound like they possibly haven't thought about everything before this big bang securities token revolution. After the break, we're going to find out why it's such a shitty experience trading on a decentralized exchange and whether there's any hope for it to get any better. So stay tuned.
Crypto Trader is proudly brought to you by eToro. Discover a simpler way to trade and invest in cryptocurrencies and more.
If you've ever traded on a decentralized exchange, which was all the hype towards the end of last year, you realize that the experience of trading on a decentralized exchange is nothing like trading on one of the better centralized exchanges. Joining me to talk about why this is the case and whether indeed there is any hope for these decentralized exchanges is David Blaznik, and he's the CEO and founder of Total. Dave, I tried to trade on a decentralized exchange, and I tried to sell a whole lot of tokens, and it took me forever. Is it going to get any easier?
Yeah, at Total, we're solving this issue that you're describing. There's low liquidity in the decentralized exchange markets because it's a newer system. It is safer, but it's definitely slower. And so there's infrastructure being built out now to improve all of these systems. And at Total right now, you can buy and sell large amounts of tokens in Ether because we've aggregated all of the decentralized exchanges in the ecosystem into one platform.
Okay, so liquidity is one of the problems, and Total has or is solving the liquidity problem by allowing, if I understand correctly, and allowing users to buy and sell tokens with one button across multiple decentralized exchanges.
Correct.
With, again, keeping the security of the decentralized exchanges. Now, if I understand correctly, the main advantage that a decentralized exchange has over a centralized exchange is the fact that a centralized exchange stores all your crypto, and therefore there's a hack risk, right?
Yeah, so the one main benefit right now that exists for decentralized exchange use is security. So it's definitely a much more secure way to trade crypto assets, and it allows individuals to keep possession of their assets at all time. They don't have exchange risk. They don't have the honeypot risk of these exchanges being hacked. They don't have counterparty risk. They don't have KYC AML. They don't have to onboard to these platforms. It's completely anonymous. It's a peer-to-peer network. So there definitely are advantages in terms of the usability. That's something we're attacking head on. And I think it's going to take time. It's going to take time for people to understand or feel the pain point in order to use this technology. And then additionally, the software has to be developed in order for people for it to be abstracted away from the blockchain. People don't want to learn about crypto assets and Bitcoin and how the blockchain works. They want to be able to use a fintech app and get the benefit from it. They don't really care about centralized versus decentralized.
So let's look at a different world. Let's look at a world where centralized exchanges are all insured, and that if your funds do get stolen out of a centralized exchange, then you get your money back from the insurance company. That's about to happen.
No, but I combat that situation because insurance companies are just as much part of the issue as is the problem that we're trying to solve. Because if you look back at the 2008 crash, it was the insurance companies and the reinsurance companies that weren't able to fulfill their obligations, and the whole system was upside down. So just to say, oh, we have an insurance company, it's a made-up value that you're saying, okay, well, everything's safe now because you have insurance. If the parties, it's a zero-sum game. If there's one bet that's made and someone doesn't have the assets to fulfill the other side of that bet, the system's messed up.
Now, I mean, I'm all for financial freedom, and I think that the people in this room, and certainly us who are ahead of the curve, kind of want to control our own assets. But every time I trade using a decentralized exchange or trade out of my Ether wallet, I kind of feel like I'm taking a risk. And every time I'm about to press click, I take a deep breath and I get that feeling of anxiety. Have I sent it to the right address? Is it actually going to trade? Is it the right amount? And then hope that it actually goes through. Now, a centralized exchange actually solves all those issues.
And they solve them, yes, in a way, but they also have bigger issues. They create security issues by the way that they solve it. They say, okay, now I'm the authority. I decide who gets to be matched with who and who gets to buy and sell. While in a decentralized system, that's decided by some other protocol. These things are just, people aren't able to comprehend or grasp all of these things because there's not the user experience. So to go back to your first part, you were worried about sending in this order or making sure it's going to go to this address. That's because the interfaces are made for programmers. They're made for developers at this point. We need interfaces. We need software that's written. It's like email. Okay? I send an email. I press send. It goes from my phone to your phone. I don't talk to you about the SMTP connection no one even knows what that happens. You just press send and it ends up on your phone. The same thing needs to happen with crypto assets, and until that happens, people aren't going to adopt it on a large scale.
So Dave, before we go, and we are running out of time, when do you think that decentralized exchanges will really be able to compete with centralized exchanges?
I think that as more people feel the pain point of centralized exchanges, I had to lose I've lost my own personal money using centralized exchanges for several reasons, going back 5-6 years. So that people need to feel the pain point. Institutions, when they get involved, will feel the pain point, lose large sums of money. They will move over to decentralized exchanges. It's also a regulatory issue. Once the U.S. government and some of these other European Union get out of their own way, some of these hedge funds and institutions can actually use decentralized exchanges. They want to. There's no way for them to feel like they're following the rules and do so today.
Well, that is all the time we have to talk about decentralized exchanges. Let me know on Twitter whether you think decentralized exchanges or centralized exchanges will win the battle. I'm CryptoManRun on Twitter. And that is all the time we have here for tonight. Next week, we'll be broadcasting from Ethereum DevCon in Prague, and it's the first time that the major news outlets have been allowed into DevCon, so that's one you don't want to miss. Until then, I'll be on Twitter at CryptoManRun, and you should trade well, my friends. That's it. Thank you.
Thanks, man.